there will be a point, and it's probably in our lifetime, where it is an independent asset and a non-speculative store of value. The other thing I'll say just broadly about the market is I think that there's a tremendous amount of optimism about the economy. I think that's why you see risk spreads get crushed.
Definitely. Yeah.
And I think that as long as we see the kind of prognostications that the Trump administration is putting out, I think people are going to be mostly bullish.
Bitcoin, the world's largest cryptocurrency by market cap, hit a new all-time high of $93,409 on November 13th, much to the excitement of investors and prominent personalities who had predicted a great year for Bitcoin in 2024. Billionaire venture capitalist Chamath Palihapitiya easily tops this list as he had made several bullish predictions for the leading cryptocurrency at the beginning of the year. During one of the earlier episodes of the All In podcast, Chamath estimated that Bitcoin could reach more than $500,000 per coin by October 2025, which marks exactly 18 months post-halving. According to the billionaire's analysis, Bitcoin's price tends to remain in the same range for about 6 months after the halving event. Then prices pick up sharply after the 6th month, igniting a massive bull run that often lasts for another 12 months. By all indications, the ongoing bull run is right on Chamath's schedule. But it is a bittersweet moment for the billionaire venture capitalist. In the latest episode of the All In podcast, Chamath shares his excitement about the bull run, which he says is only just beginning, and his regret about selling a part of his Bitcoin holdings too early, a decision he estimates has cost him about $3 to $4 billion so far. Chamath's regret is further heightened by the fact that he had used the Bitcoin, worth about $1.6 million at the time in 2014, to buy an empty lot in Lake Tahoe. When he gave an update about his loss porn in February 2021, the $1.6 million in Bitcoin would have been worth nearly $130 million. Today, it is worth billions of dollars. Certainly, the empty Lake Tahoe lot is nowhere near this valuation a decade later. Regardless of this costly mistake, Chamath remains a big Bitcoin bull, predicting even better days ahead for the leading cryptocurrency. In his words, there will come a time in our lifetime when Bitcoin will become a fully uncorrelated and independent asset and a non-speculative store of value. Chamath believes one Bitcoin will easily be worth millions of dollars when that day comes. As we bring you clips from the podcast, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Honestly, you know what I think about? I actually think about all the Bitcoin I sold.
Oof. Yeah,
I had Bitcoin. I had a bunch of Bitcoin in my funds when I managed outside capital. That's a $3 or $4 billion mistake and growing now because my partners at the time capitulated and I wanted to be a good team member and we distributed and it was profitable. But obviously I shouldn't have sold it. Would have made them a lot more money. And then I think about I bought some land in Lake Tahoe.
That.
It was in the Wall Street Journal. I'm sure you can find it. But how much is that worth now? Probably a couple $100 million, maybe more.
Chamath, can I ask you a question? Why do you say sold Bitcoin as opposed to converted Bitcoin into dollars? When you think about Bitcoin, just as a participant, do you think about Bitcoin as a dollar-denominated asset that you go and buy Bitcoin and then you're eventually going to sell it, turn it back into dollars and use the dollars? Or are you what do you think about the purest kind of idea that Bitcoin should be the de facto currency and store of value in the future and the dollar doesn't matter? And we shouldn't necessarily be talking about the value of Bitcoin in dollar-denominated terms as something I'm going to eventually turn it back into.
It hasn't happened yet. And so until it happens, I think you have to view it as a very good gold proxy. But it's a largely dollar-denominated asset.
Now, why do you see it going the other way? So a lot of folks thought that as a safe haven, it should do well when there's a negative economic outlook. But it has traded the last couple of years kind of the opposite.
Totally correlated. It's a totally correlated asset. I mean, there will be a point, it's probably in our lifetime, where it is an independent asset and a non-speculative store of value. There will be that day, but that day is not now. And I think it's very important to see the conditions on the field as they are versus what you wish it to be. And the reason is that it allows you to risk manage more appropriately. Because if you don't see it, then when something happens to the dollar complex, good or bad, or when something happens to rates, good or bad, or when something stimulative happens, good or bad, you're not going to react properly if you're in the business of managing it as a risk asset. So if you're in the set it and forget it bucket, and there are some people, I think it's great. None of these conversations matter. But like most people, you're probably going to be motivated to do something. And I think if you're motivated to do something, or you have FOMO that stimulates you to do something, whatever the psychology is that leads you to action, it's probably important to just view things as they really are versus how you wish them to be. And so I think the purists may eventually be right. I think they will be right at some point in my lifetime, but they're not right now. And that's why these things are correlated. And
if
you
the
should
market
act
goes
appropriately.
up,
The other thing I'll say just broadly about the market is I think that there's a tremendous amount of optimism about the economy. I think that's why you see risk spreads get crushed.
Definitely.
And I think that as long as we see the kind of prognostications that the Trump administration is putting out, I think people are going to be mostly bullish. I think the way that this trade turns around is when something actually breaks in terms of the inflation picture or in terms of the deficit picture. And if those things look like going into 2025, that President Trump's actions are not going to be able to course correct it, then I think you're going to see people go massively risk off, which I think will not be great for markets, obviously. But right now, we're not in that point.
Like Chamath, entrepreneur, businessman, and angel investor, David Friedberg is certain that President-elect Donald Trump's victory is a part of the reason asset prices are soaring. According to Friedberg, market participants believe Trump's policies will stimulate investment and encourage economic growth in all sectors. Friedberg also shares ARK Invest founder Cathie Wood's expectations that there would be more deregulation under Trump, rolling back all the red tape that burdened Americans and stunted economic growth. Both believe these deregulatory efforts will be great for industries like the digital asset space that has been in the crosshairs of regulatory agencies like the Securities and Exchange Commission. Cryptocurrency investors are especially excited about Trump's promise to fire SEC Chair Gary Gensler as soon as he gets into office. They believe this will encourage further growth and development of the industry in and out of the United States. Here are more clips from Chamath, Friedberg, and David Sachs.
And I think, like you said, it's not limited to crypto. Crypto is one market of several that have been significantly affected by the outlook based on Trump's election. I think that Trump's election has a couple of key features that are changing market dynamics. One is folks kind of view some of his policies to be obviously stimulatory with lower tax rates and more deregulation. This is, theoretically going to drive up investment and economic growth. The deregulatory nature on its own benefits markets that have been encumbered by regulatory oversight and regulatory challenges like crypto, finance, and fintech. So those types of businesses are clearly going to benefit or expected to benefit significantly by being able to launch products more quickly and have features and ways that they can generate revenue that they might be challenged to do under the current regulatory schemas. And then there's also this element of kind of things being inflationary, the feature of tariffs. If we don't get spending cut fast enough, there's an effect on markets. So, we're still seeing 10-year treasuries sit at about 4.5%, up from 3.5%, which is where we were right around the rate cut beginning in September. And remember, since those rate cuts began in September, we've cut 75 basis points. And we're still seeing the kind of 10-year treasury hold high, which kind of implies that there's expected to be persistent inflation. In fact, the October inflation number accelerated again. So it's back up, not going down. I think it went up to 2.6%, up from 2.3% the month prior. These general kind of effects that are predicted from the Trump policy plans is having an effect in different markets. Obviously, in equities, we're seeing more kind of risk-seeking, risk-taking. And then in the bond markets, because of the 4.5% treasury yield, there's a really interesting dynamic. And I kind of sent this link out yesterday. But if you look at the spread on yields between U.S. treasuries, which have historically been kind of considered and talked about and are deemed the risk-free rate, and the yield that corporates have to pay to borrow money, we haven't seen a spread this low in 26 years. So it's a 17-year low for the spread between the yield that companies that issue junk bonds have to pay from treasuries. And it's a 26-year low for credit grade bonds. So this means the market is either more risk seeking, meaning they're looking for more yield and they're going into corporates because they feel like there is a higher probability that these companies are going to be successful in the future. They're not going to have higher default rates, et cetera. So the market is becoming much more risk seeking. Or the alternative is that parts of the market are reassessing the risk-free nature of treasuries themselves. If spending doesn't get under control, the treasury market appetite is decreasing. So there's this kind of spread that's shrunk in the last couple of months. So we're seeing capital flooding into the markets for risk-seeking assets. And this is obviously affecting crypto, equities, and bond markets all across the board.
Sachs, your thoughts on crypto before we get into IPOs and M&A, if any?
Yeah, just on crypto, the House Republicans already passed a framework for crypto regulation earlier this year. It actually got 71 Democrats to join it. It was called the Financial Innovation and Technology for the 21st Century Act, or FIT 21. And it would classify digital assets like crypto as commodities regulated by the CFTC if the blockchain they run on is quote, functional and decentralized. That's the key requirement. If their blockchain is functional but not decentralized, then they would be considered securities and fall under the purview of the SEC. I think the crypto industry basically wants a really clear line for knowing when they're a commodity, and they want commodities to be governed like all other commodities by the CFTC. So that's what the Republican bill would do. I think with the Republicans now winning the Senate, the prospects for that bill to get enacted are now greatly improved, especially because Sherrod Brown, who used to run the banking committee, just lost to Bernie Moreno. This was a seat in Ohio. Elizabeth Warren is still going to object to this legislation, but she's just going to have way less influence. And like you said, it's not clear that Gary Gensler is going to be sticking around very long at the SEC. So look, the bottom line here is that I think that we are close to having clear rules of the road codified by Congress, which is what the crypto industry has been asking for. And the days of Gensler terrorizing crypto companies by issuing Wells notices without clarifying what the rules are that he's prosecuting, those days are about to be over. So I think this is why the crypto markets are rallying.
In other news, Bitcoin investors are celebrating the approval of spot Bitcoin ETF options, an event MicroStrategy Executive Chairman Michael Saylor says will accelerate institutional Bitcoin adoption and cause Bitcoin prices to skyrocket sharply. On November 16th, Bloomberg ETF analyst Eric Balchunas announced that the CFTC had cleared the way for spot Bitcoin ETF options to be listed, noting that the Commission's approval was the second hurdle that needed to be cleared after the SEC's approval in September. The third hurdle, approval from the OCC, has now been issued, and Balchunas believes the options could start trading as early Tuesday. The OCC's announcement reads, September 20th, 2024, the U.S. Securities and Exchange Commission approved the listing and trading of options on iShares Bitcoin Trust. On November 15th, 2024, the CFTC Division of Clearing and Risk issued a staff advisory related to clearing of options on spot commodity exchange-traded funds. Based on this advisory, OCC is preparing for the clearance, settlement, and risk management of such options, which are subject to the new option listing process as outlined in the Options Listing Procedure Plan. Our intent at NASDAQ is to list and trade these options as early as tomorrow. NASDAQ head of ETP listings Allison Hennessy revealed on Bloomberg's ETF IQ on Monday. While she did not confirm that options trading for spot Bitcoin ETFs would begin on November 19th, Hennessy noted that once the OCC approval is secured, the listing process tends to move quickly, often within just a few days. Although the approval was specifically for IBIT, Bloomberg ETF analyst James Seifert suggested that other Bitcoin ETFs might also begin offering options trading as early as this week. Jeffrey Park, head of alpha strategies at Bitwise, has described the approval of options for spot Bitcoin ETFs as the most extraordinary upside volatility of volatility in financial history. Park highlighted that trading Bitcoin ETF options under the regulation of the OCC significantly enhances Bitcoin's financial utility by opening up new possibilities for leverage and sophisticated investment strategies. He elaborated that Bitcoin's unique characteristics, particularly its fixed supply and inherently volatile nature, make it well positioned for dramatic growth in this newly regulated market. Park concluded with a stark observation. In summary, the Bitcoin ETF options market is the first time the financial world will see regulated leverage on a perpetual commodity that is truly supply constrained. Things will likely get wild. In such scenarios, regulated markets may shut down. We'd love to hear your thoughts on the video, so be sure to share them in the comments section below. Don't forget to like the video, subscribe to the channel, and turn on post notifications to stay updated with more content like this. Thanks for watching, and see you in the next one.